What's up, guys? Welcome back to, I think this is episode number 5, if I remember correctly, or 6. I'm not exactly sure. But today we're going to start going over some technical aspects. So I went over the fundamentals that I wanted to go over, the things that I thought were important initially for you guys to know. And then now I'm going to give you a little technical background, technical meaning like analyzing the charts and then we're gonna try to put things together a little bit, and then from there we're gonna go and we're just gonna start watching. I'm gonna go into more advanced technical analysis stuff when we meet up together, and then I'm just gonna jump right into things from there. And we're gonna go over pairs, and we're gonna see how the market is actually working in real time, and then we'll move on from there. But today I'm gonna go over some simple price action stuff, and then I'm gonna first talk to you about support and resistance, and then talk to you um, about candlesticks. And then from there, I'll see if I want to talk about anything else. But I think that's going to conclude that for this video. And then next time I'll go over trend lines initially, the beginning part of trend lines, and then I'll do Fibonacci stuff. And then after that, I'll do what I'll do. I'll go over break and retest. I'll go over structure. I'll go over like volume. I'll go over stuff like that. So yeah, so we're going to start off with support and resistance. So I have the line chart here right now. You guys are probably like used to seeing some sort of like um, bar chart or candlestick chart. But today I'm just going to go over some support and resistance. And actually the break and retest principle will actually apply to this. But basically what we're going to be doing here, let me just make sure it is indeed recording. Okay, it is recording. So what we're going to look at here is we're going to look at previous price and see where price previously, was sticking to, and then we're going to apply it to using it in the future. So in order to study and think about the future, you're going to study the past. That's like a cliche, like the past always repeats itself. But in the market, when there's a certain number that a market sticks to, it's gonna, there's a lot of fundamental news surrounding that price, and um, there's a lot of things going on, and that is actually also going to factor into where that price hits and where that like where that price is going to reject off of. So here, first example, I'm just going to go over right here. So we first have this high created right here, right? So I'm gonna make this line different colors so you guys can see it. Let's make it blue. So you see this line right here, right? When we went up, we shot up for quite some time, and then we retraced heavily, and then we failed to break. We just consolidated for a little bit, but when we came back up into that zone, let me go to the daily time frames. Maybe it'll be a bit easier representation. That's a weekly time frame, so it's a really long time frame. So here you get better representation that when we had this high, that's going to be, and think of that as like a key swing zone, because when we first hit that, we started selling off heavily, and that's like a price that people are going to remember generally. And that's going to be an important price in the future to break past if we want to continue higher, right? And here, once we break past that, we're no longer in the control of the bears. And at this point, we reaccumulated, we made a series of higher highs, and we kept on going higher, and price broke out of this range, and once it broke out, it continued to chug higher. And then next concept here is we're waiting, right? Once we see this action right here, we're not doing anything right here. Maybe we're positioning ourselves in buys, but once we break this right here, we have really good conviction that it's going to go higher. So really high probability, and the momentum is on our side that it's going to go higher, and indeed it does. And then we go a lot higher, and we go to the 1,000 mark. So next point, if you think about 1,000, it's a key psychological number, right? So people, when it's like, it goes, from quarters, 25, 50, 75 to 1,000. So 1,000 is a key number where people are most likely going to take profit off of. And as you saw there, it was a larger take profit sell wall that it hit at 1,000. So you have that, think about that psychological aspect. Gold hasn't hit $1,000, really ever, I guess. In the past. Let me see if it ever hit $1,000. I mean, it may have, but I'm not seeing. Nope, it didn't hit $1,000. It hit a high of like 800 something, but we rejected at the $8,000 mark, or the $1,000 mark, and we retraced from there. All right. Next concept is, once we come back, where's our target, and we're going to be relying on history to tell us where our target is. And as you see, previous support So if this is, or if this was resistance at one point, and now it turns to support, because basically, when I was talking about the breakout and retest pattern, when basically when what happened here is when we reached that point, we reached a bunch of sellers, right? A huge selling order, which caused price to go down. But after that, price started to mellow out. And when it started to go higher and higher, that same selling order wasn't there. That same selling power wasn't there. And when we came back here, obviously there was no selling power here, right? And the buyers completely took over. And once the buyers took over, we hit that $1,000 mark. Where are we going to expect them to come back to? Once the buyers already won here and the sellers were out of fuel here, that's going to be a key point where buyers, they took out a major selling point and now it's controlled by buying points. So let's say, it's color coded. That's red, right? Once it breaks this, let's just say it's green, signifying that it's controlled by the buyers, right? So, and then if it's green, then you can just carry on that green line, and let's just make this blue line into a green line now, because now it once was red when we were down here, waiting, because we were on the sell side because there was a huge selling order. But and we would have waited, we would have expected this price to reject initially. And if you see on the very, very small time frame, when it first hit there, it rejected very little bit and then it broke right out. So that was a very weak resistance level. And once we broke out, it was weak, and we broke out heavily, right? So and once we came back down, we went into that green zone. So basically refueled. And now that we can use this price point right here, and we can just set simple buy limit orders that basically when the price does come down there, regardless if you're watching the screen or not, the buy will automatically trigger. And if you see here, literally like to the dot, we hit that. So our risk reward right there is maximum for buys. And then once we buy there, our next target, since we're in a range now, right? Since this is a high and this is a low, expect that this buyers are going to come in there, and expect that we're going to do some sort of ranging. And indeed, we did range. As you see, we went all the way back up top to the range. We first made the initial down move, and then we started to let me just take some of these out. We started to go higher, and the initial target would be the 1,000 level. And as you see, 1,000 hit, we retraced, 1,000 hit again, we retraced again, and then we made a series of higher highs, and price never really broke down. So once this point right here, once we considered at one point that was a red point, right? And now this point, as we broke out, it's considered a green point. So that green point will be looking for. Let me go to the larger time frame so we can actually see things a little better. So basically, that's a quick example of support and retest. As you see, let me just keep on going and show you how it is a completely going to be repetitive process. It's going to keep on doing this. This is simply how the market performs. Once you see here, right there, we hit a high, market retraces, we go up, we come back in, buyers. So at this point, let me make this, hold up, let me just, okay, so at this point, sellers are in control, right? Sellers are still in control, still in control, still in control. Oh, okay, now they're being should say they're battling each other, and buyers win for a second, and then buyers come back into here. And so basically when we break at that point, when the price breaks, you're going to know that it broke. So basically that means that the sellers already lost. They already lost a major battle, in the sense that they did not hold this price point. And once we broke out of that, see how we didn't really dip very low. We did dip down into this a little bit, but we ended up breaking out. See, and that's when it was green controlled. Here was red controlled, because that's when the large selling block came. But once we broke out that high, momentum was to the upside. As you see here, another example. Oops. There we go. Right there. It's just clockwork over and over again. This always presents itself in the market. Oh, okay. Okay, and then here you have this point of resistance, and then like later on, once we break out, right, you have to have the same notion that it's going to turn into green, and that's going to be green until, which is the next like basically this whole thing was green. Okay, right. So up here you have a major sell-off, right? So this is all in hindsight. So once you like see that this broke out, you can buy this momentum trade, and once you see like this M formation here, maybe you're gonna get out, right? Once you see a good amount of profit, but once it comes down in here and retraces, right, you're gonna have buy limit set up here. You win once, you win twice, and then the third time you start losing. But if you this red line, right, if you bring it down to here and see that once we retrace, sellers won, and then sellers won there again, and then sellers won there for the third time, you know that your buyers are gonna lose at some point. So when it does come back down into here and it does break, it's we keep on holding here. There's really no close down here below. It's just quick action down there, quick, quick, quick. And then here, there's some action. It tries to hold it, but then it breaks down, right? And then once it breaks down, that was a big fat candle. And from there, the momentum is to the downside, right? So from here, that point now carries a bearish bias, and this carries a bearish bias. And we know if it does come back to this price, then we're going to be selling it, right? But as you see, it never does come back down to that price. And we would have expected this price right here, 1,000. We're still waiting for it to come down to 1,000. We have buy limit set at 1,000, but now in the smaller time frame, when we come down here, we see a significant bounce here, right? So once it comes back down into there, we're going to expect some sort of significant bounce, right? And then up until it breaks that point, then we're gonna be bearish. But see, it breaks that point, comes up into there, and then comes back down, and it breaks back down. And as you see here, once it breaks back down and it starts to reject that price point again right here, what you'll see is that it's really, really weak. You can see that it's really not making any progress higher, and it breaks down from there, right? And then it keeps on breaking down until that price point is revisited, and until that price, we break out, and we use that breakout as the buying gas is there. See, signified by the green line, and we keep on holding that price point, right? So we go higher from there, and then we come back down. We break out really quickly. So I mean, in a sense, that would be a little bearish, because we did break down, and then but quickly, very quickly, we came back up, and we quickly broke back out of that red line, and we have been supporting that. We broke out, boom, once, boom, twice, three times, and then goes higher, right? And then another thing is that, as you see here, we broke out, right, retested, made a high, and then came back down, and went up, and then came back down. At this price point right here, where we had this resistance, is going to be a major price point. So from there, you add that over, and once we have a breakout of this price point right here, then you see that it's a buyer's market, until for a very short-lived amount of time, and then it simply just breaks down, and then comes back up. At this point, we've just been in this ranging market for a very long time, and the market is really like, it's just been consolidating in this like larger time frame. So like if you see here, like when we first retrace and then second retrace, but first time when we retrace, if I just take this and draw this over all the way, then like you see that that was the first time we retraced heavily, and then our second high, like based off of that, was right here. And then we still hold that. So this continues to be bearish until we see a break of 1375 with conviction. Then this line is not going to turn green, and until we see like a bigger break of 1438, then this is not going to be a very, very solid buy, right? So if I drag these lines over, right, so this line was very important throughout this whole entire range, right? It's constantly has been there. And if I draw it over, it was green, right, up until now, up until the point where we just broke. So right now we are back into bearish red territory, and oops, we are back into bearish red territory. So Actually, ever since so here's how we're gonna play it. So ever since we broke this right here, right? Ever since we broke that price point, we've been bearish, and from this point, we're gonna think to ourselves, if we're gonna be playing support and resistance is gonna be telling us where our targets are going to be, right? And if it's going to be telling us where our targets are going to be, our targets are going to be based off of the support and resistance, right? So if we break here, right? If we're now, I'm gonna go on smaller time frames. If we're right here, and just these lines aren't all straight, but you get the point. Let me just make them a little better. Okay, so as you see here, this red price point, once we broke down right here, and once we started stalling, you know that the bears have already taken control. So once that happens, um, right down here, let's say you're waiting until 1275, and then from 1275, you're like, okay, it's clearly, we broke to the downside and the momentum's to the downside. If you opened up sells anywhere through this whole entire thing, then, I mean, let's say you open sells in the middle, right? Like right here, when we had this little, so like even on the smaller time frames, we had a little like retracement right here, right? Right here. And when price came up into that retracement, it sold off, right? So that should have been a red line. It was a green line, and then it became a red line. And then if you took the sell off of that and you were targeting this support range, you would have easily hit take profit, and you would have made about that was what move 1258 to 1206. So that's like a nearly 500 wait, what, yeah, 500 pip move on gold. So that's pretty big. So like, when we're down in here right now, we're at a pretty key price point. And if until price breaks up above this red line, something like this, then we're not going to be buying until green line posts up, until we break out and we can have limits at 1200. There really is no point to trade gold on the buy side right now. I mean, if it does continue to break even lower, then I mean, what would we do? What would we consider? We would consider, so we could draw these targets even lower. So like, we come down, we go up, and we come down. We make a move lower, and at that point, this would be considered, a buying point, and then see how we come up in here. And then here it's very weird price action. We make a lower low actually. So at this point it's like red, and then we break out of the red. So like, okay, so in this example, right, it's green and green until we break down, right, and then it becomes into red. And then when it does become red really quickly, we break out of the red, right, and then we become green again. See that? And then we could have limits right here set up, and it came right in there real quick and then shot right up, right? So our targets on gold are going to be like, we're going to have this green buy point, that they have already established, and this low right here clearly, which has not been broken. And that would be a target. So if gold does continue to just, shit the bed from here, then our we're going to be on the momentum side, right? And we're going to be targeting like there, and we're going to be targeting like there. Okay. And then longer term, we're going to target this $1,000 range is going to be keys, because we know historically, before, we broke out of that 1,000, and we haven't quite really retouched that 1,000. So when we do get back into that range, it's going to be a lot of buyers stepping into the market. So that's what I have for support and resistance. This is one example, such as gold. Like I can carry this on, and I can here. Let me just carry it on then. So here, we have a little rejection. It would be red. So rejection, it hasn't really broken out, but like in this example, right, like it's a little bit more, it's a little bit harder, because I mean, it makes the trader work a little bit more. But see this line, it was green, right? But we have a first sell off here, and then we have a second sell off here. But every time we sold off, we kept on bouncing from here, right? We bounced from there once, we bounced from there twice, right? So once that sold off, this line was green, so we'd be going long here, right? And we'd be targeting higher highs. And once we sold off here, we'd be targeting a higher high. Once we'd take profit up here, let's just say. And it sold off, right? And then we'd buy again here because we knew it was green, and we knew that that was a good point to buy. So once we came up in here, so this was that red point again. We retraced off that red point, right? And then once we came in there again, and we broke out, as you see here, um, clearly that price, as we broke out, the momentum was on the upside, and we could have bought a few times. But here, what you see here is that the resistance was kind of, or I mean, it kind of held support a little bit higher. So like next time, so this line was still there, right? So next line we draw is another line like in this current range, right? So we'd put it right there, and then once that breaks, it becomes into a red line, and then that red line, once this green line breaks, it becomes a red line, right? So we just bring that down, and once it comes back into that red line, clearly see how it just denies it and rejects it, right? And the momentum is on the downside. We're going to be targeting this right here, and eventually we're going to want to target this, but it meets kind of somewhere in the middle. So like for our first target would have been achieved, and that's 100 points on gold. And on gold, $1 is considered 10 pips, so that's considered 1,000 pips, right? And then if we took the sell off here, once we broke down, maybe we took it a little bit lower, or we were just holding our upper entry. We got a little halfway to our target, and we got about $50 again on that. So, yeah, that's that. So we have this example right here, where we have that high coming in, and as we have that red line, we respect that red line heavily. So it's once we break out, we can buy to that red line, but we don't want to buy until we break out of that red line, right? Because it keeps on getting killed. Boom, 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 boom. Sellers keep on winning. And here, down here, you have this little green line, right? And oh, don't want to replace that. You have that, right? So until you come down, you break, and you really can't do shit, to come back higher. And at that point, you see, all right, it's really weakness coming in, and God damn it, the fuck, yeah, okay, so there we go. That point is weakness coming in, and here, we bounce at this green line up until when we break it, and then ever since then we've just had this bearish. So like, what you want to do is you want to look at where is the trend at, like so like right here, right? So like we come up. Let me just go through this with you guys. One example. We just do it on a new pair. That's possible. Okay, right here, we're not in any position. This is just simply marking a bottom, right? I wasn't even trading back in, I mean, I was, but I was kind of, I wasn't really looking at Euro USD, but here we have a bottom, right? And here we have a little bit of consolidation, and basically that's where we're expecting our range to begin. And clearly our range begins there, right? So here, from this point on, I'm going to put a green line. And from this point on, you're going to get, oh, fuck, a red line. Okay. All right. So this is our range, right? For what we know. This point comes up there, right? So, we're going to have, we're going to have some sort of rejection. So these aren't going to be like, let me just put the candlestick on, because it'll probably be right on. So, okay. So here you have that point signified by this support and resistance. Clearly you see this, right? You see a break, you see the support, you see a break, and you see a retest, and you see, it can't really go back higher. So it chugs lower, right? And then here you see a bounce, and then you see, okay, so here you see a bounce, right? From here on, you see a bounce, and then you see rejection, right? And then you see second rejection, right? So maybe you see the first rejection, it was pretty substantial. So let's just say you take your line thingy and you write it over like that, okay? So you see it rejects one time, okay, maybe that's a significant point. Okay, you see it rejects twice, definitely. So at that point, you can definitely draw it. And you can definitely say that this is a point of resistance. And third time it rejects too, right? So let's just say you took a sell off this third one. You could, this is an easy move you could catch. Your target would have been somewhere down there, right? Well, yeah, your target would have been somewhere down there, right? Because you had this green line, you have this red line sell set up, right? But then also, if you look back, this line right here, oops, let me, wow, this is big as hell, bruh. All right, so you have this point right here, which we bottomed out at, right? We have some, pretty good retracement off of there. And as soon as we break it, this becomes into a red point, correct? And that red point continues, right? So we are going to know that until price, so it comes down here, goes back up into there. We know that that price point is going to be, let's just say that that's not even there. When it comes into this area, it's going to reject that area. It's going to see some sort of sellers come in the market. And if we look at how far away that was, and that was clear, that was literally like 40 pips away from this price point, right? And this is like a key 1.11 area, and this is like just rejection from that area, right? So once we have that set up, and then once we start seeing rejection here, and we can clearly say that it's in our interest to next time when it comes up into here to sell it, and we're going to be our stop loss is going to be somewhere above here, because we know if it does come up into here, we're going to get out and we're going to start buying, and our target's going to be down here. Lo and behold, we got close enough to our target. We would take profit a little early. Let's just say we took profit early right there. Okay. That right there is 2.84 risk to reward. And our entry is at 1.10. Our profit was at 1.06, resulting in a, what is that? 100. Oh no, that's about 400 pip move. And that's pretty crazy. 400 pips is a lot. Our stop loss was about, 80 pips or so, and our target was, and this took a pretty, it didn't take, this is on a daily, right? So every candle represents a day. So we went up there, let's say we got our entry there. It took 1, 2, 3, 4, 5, 6, maybe 7 days to take profit. But continuing on, right? You have this point right here known as resistance, and this point right here known as support. So once we come down into the support range, don't assume that it's going to clearly like touch that exact price. That price is what we have and what we're going to base off of it. But clearly, as you see here, I'll show you guys some other things later on. But here you have a retracement back into here. Basically, it's literally right by this low, right? There's really no difference. It comes right into there. So, even moving that line up a little bit doesn't hurt. So once we come back into there, that green line clearly holds. So we could, if we wanted to, enter into long positions here, right? And our stop loss would be below this low, and we would target this range, right? Top of the range, because we know it's been ranging. And we know since it's been ranging, then we can, we can expect it to go there. So that's another trade right there, right? So far we took 2 trades, and I'm just going to keep them on here, just fuck it. And I'll show you the trades that we lose, and then show you the trades that we win too. Okay, so there's that. After that, we break out here, right? We come back. Once we break out, once we clearly with a huge ass green candle, once we break out, we come back into here and we retouch it, right? And we know that this right here, once that broke, that became green, right? And once this broke, this became green. And wow, that's really annoying. But and once that, let me just make these a little straighter. Green money machine. Okay, right. Once that became green, we knew that we're going to be, once it comes back into this price point, we're going to be buying and buying. So let's say we got in right there, and our target would be this red, because we know that's our support and resistance. Our stop loss would be below there, right? So we hit our target really quickly, right? And then once we rejected off of there, we could have clearly taken the sell right off of there if we wanted to, or if we were a little later, let's just say we got in right there. Our stop loss would be above there, and our target would be this green, right? This green. And then once we broke down, once we want like well, so let's say we were taking the swing trade here. We knew that this is the bigger range, right? The bigger range in this picture right now is started here from where we first told you and is bottomed out right here, right? So and once we come back and once we're down here, we clearly bought and our target is going to be eventually our target was this upper high, right? So that's the last place we took profit. And once we took profit there, we knew that there's a larger range going on. So once we took profit there, we could sell there and our target would be as low as here, right? All the way down there. But as you see, our target is going to be, since we're taking it level by level, our target's going to be down there at this level. And then for a brief moment in time, we do break back down. And once we do break back down, I'm just going to keep this line in because it was the most recent one. Once we do break back down, very, very quick action to the downside. Let's just say we did take a sell there because we did break down. It does make sense for us to sell there. And our target would be this low, right? But we do get stopped out here very, very quickly, pretty quickly. And then once we get stopped out, we know that once we have a big ass green candle. So I mean, if we go on the smaller time frame and we clearly see that we come back up into here, we could cut our losses. It's about cutting your losses and knowing when to get out. So once we see a momentum come up out of there, we can easily get out. But after that, we're going to be like, oh, okay, this was red for a brief instant, and then it turned green. And it was green up until, so from here, let's just say, we broke out and then you bought in right here. Like, it's simple limit. Once you set that limit there, our target's going to be up here. Let's just say we got out right there, right? And our stop loss is going to be below that point by a little bit. So what you're seeing clearly is that this is working. So once we come back up into here, we're still holding this upper red, and we do see rejection, and we do come back down. So like that's another sell point that you'd be looking at. So like once you come up into there, you'd be like, okay, well, we rejected there. We didn't really do shit. So I'll sell again, and I'll stop. My stop loss will be above here, and my target will be down into here because as you see here, we did have that support created there. We did have that bounce up into there, and our target would be from this point to that point. And clearly we hit that point very nicely. And from that point, we'd go into buys because we knew that would be a buy zone. It's clearly going from zone to zone. Once we take profit there and we see rejection, we can get in on the second touch there because it dipped it back down and it gave us another opportunity. Then our target would be up here again. And then once we see a breakout, of that point, maybe, we only see one breakout and then one shitty day of price action. But let's just say you did take a long entry because, it presented itself. We did breakout. Your buy limit would be right there and your stop loss would be a little bit below. And let's say you get taken out. Okay. And clearly, I mean, you take a loss, right? You take a loss here and that's fine. Clearly fine. But once we retrace off here, next point where we retrace is right there, right? Up until it turns green right there. And then that point's clearly a green point until it breaks here. So like, you can trade in that range. I'm just not going to enter these position thingies because I want you guys to do that for homework later on. But so this point hasn't broken, right? So like once we come up into here and we get out of that trade, we reject it. Okay, we take the L, right? We come back down into here, we buy, right? Our take profit is continuously this level, and we can continuously sell this level because we already got gypped here once. We're not going to get screwed again. So we know that we can sell off this level once there, and target this right here. And then, let's might as well do it again right there, and then target that level right there, right? Again. And then once we break down, we can take more. Once we clearly have that sell momentum, we can take more sells or stop loss above there, and our target's going to be down in here in that range. And then once we clearly see another break of this range, we see that, and we can target the bottom again. See it's just leveling level by level. And then once we break down there, clearly you have the red line again, and then you draw that over until it becomes green. Really, I love the green. And then see the green holds, breaks down a little bit, but continues to hold actually very nicely. And then you see this initial red here. So, as that continues to hold, you can play this range, and you can target this right here. And, for a brief moment, this becomes green, and then red real quick. As you see, it's just fucking around in there. And then, when it does become red, it comes back down to this level again. And at that level, you're like, shit, I can go long again, and I can, put my stop loss a little bit below that level. And then from there, I can target, this red point, even this top upper red point, because, I knew that this is the range it's been in, and clearly this is a good point. And once we broke out of here, and once this green point really became, once this red point really became green, that's in second buy area where you had, better momentum. So you could buy up here, stop loss a little bit down there, and you can have that trade take place. And then continuing on, that's just like, I can do this over and over again, and I'm just going to finish this for you guys, in like the longer term. So, here, you have bounce, right? Until you have a break, and then you come right back up, right? You come right back up, and you continue to hold that until you have a break here. And here you have, some sort of like smaller time, support, clearly, that we posted up. So, when you had that, you have this red right here created, and you have this red right here created, right? So I'm just going to draw these over. So once you have this green, once you have this red turn into green, you can buy up until there, comes back down, buy up until there. It gets lower and gets lower, right? So you can take this bar lower and lower. And as the price is pinching right here, we get a little, like, it's a place where it reaches a few times. And, as soon as we break down, you see that red. And then you see, like, huge, we go right up into there, and we see a wick, huge wick, and then we see a huge rejection. And then, that's still red. That's still red, 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 until here, we come into there, and we clearly have a strong breakout. And we clearly see bullish momentum in the market. So, you know, I'm just going to go over here. You have that red right there, starting there. And then once you break out right there, it turns into green. Yeah, so really that's all I have for this. Like, if you're looking at, if you just like, once this broke right here, that became green, right? So take this green line, put it right there, right? Okay, so, okay, a few things. Once this red line broke out right here, right, it became green, didn't it? Yeah, it did, because we broke out clearly. It's the whole principle of this shit that I'm talking about. But what you see here clearly, when price retraced back into here and we dip down into there, that's a clear area where you could buy. And if you just take it above this breakout, as you see here, you have that red line there. Price comes in, we have a retracement, you bounce off there a few times. This line has been green, right? So it's been green really until, like, we broke down here. And then so right here we had that red line, became green for an instant, and then it became red. So basically what we're looking at is, once this price point really, like, it was really evaded, kind of like we broke out real quick and then we just broke down real quick. But once we came back down into here, we did have very briefly have a red portion on EU, and then that was no longer red. We broke out here, and then we had that acceleration, and then eventual breakout. So currently we're looking at a lot of buy areas for EU. So we're, until this price point 1.698 holds, we're going to be targeting EU to go to the upside, and we're gonna, just want it to chug on higher and go up all the way over there. So, and when it gets there, we're gonna smash it with sells, and we're gonna target this price point, and then we're gonna target wherever it rejected next, up there maybe, and then up there from maybe it'll go, like maybe it'll go there, and maybe it'll go, down here, and then it'll start chipping away at that, and then it'll bounce up from there, and then it'll, eventually make a major move. But this is basically the support and resistance that I was talking about. If you need to rewatch this video a few times, go ahead and do it. But I mean, if you just study this and go through the process of me doing this, like I have a shit ton of lines on here, but like, it really makes sense. And for homework, I want you guys to mark up, some charts. I'll give you some, mark up any chart you want, really, and just not the ones that I just did. And go over it and show me what you got, and then we'll go over it in the next video. But that's all I got for this video: support and resistance, and how to trade it. So thank you very much for watching. And if you guys have any questions, feel free to ask me, as always. And have a good day, everyone. See you tomorrow.